Yes, we'll be back from the break. You're still watching Smart Means Business. Now, heading straight into what is happening in Caribbean South Africa. Now, Treasury bills undersubscribed as rates fall. That is in Kenya. Now, of course, the Treasury bills were underscribed for the first time in 2 weeks as the rates continued downwards after a progressive interest rate cuts by the Central Bank of Kenya. Now, this week, the government raised about 18.9 billion Kenyan shillings against a targeted, that is 24 billion, that is a 78.6% under subscription, lower than 138.1% over subscription that was registered a week earlier. Now, only the 364-day paper was actually oversubscribed, owing the slightly higher returns offered on the paper that is compared to other shorter terms. Now, the Central Bank of Kenya, however, accepted the 96.1% of the total bids received, that is amounting to about 18.1 billion Kenyan shillings. Now, demand was actually skewed towards the 364-day paper, attracting bids worth 10.3 billion Kenyan shillings, translating to about 100.3% subscription rate. Now, the 91-day paper received bids worth 3.4 billion from the targeted 4 billion, that is with a 182-day paper attracting bids worth 5.4 billion Kenyan shillings. That is about a 54.5% under subscription. Now, yields on all the tenors edged lower, of course, trailing below the 12% mark following the 175 basis points rate cut that was in 2024. Now, the average accepted yield on the 91-day, 182-day, and 364-day papers declined by 0.03% and 0.05% and 0.03%. That is respectively compared to last week's auction to about 9.5% to 10% and 11%. Now, the aggressive tightening by the CBK in 2023, spiraling over the 2024, the high yields that clocked about 18% in February. Now, popularizing the short-term government date, that was the reason. Now, the CBK's Monetary Policy Committee is expected to meet, that is on the 5th of February 2025, with the markets banking on either another rate cut or another amid easing inflation and a stable currency, that is the Kenyan shilling. Of course, it is actually proved a little bit, stronger compared to the United States dollar. So let us see how that really takes the country. Now, still in Kenya, a looming hike in sugar prices as millers face about 4% levy in February. Now, the sugar bill signed into law by President William Ruto, that is in November last year, was a Trojan horse for the 4% sugar development levy that almost likely be transferred onto consumer prices. Now, the law sought to revitalize, that is the ailing Kenyan sugar industry, which was actually, the law sought to revitalize the ailing Kenyan sugar industry. That's according to the report, which had wrecked the economic prospects of many sugarcane farmers in the Western and Nyanza regions. Now, the 4% sugar development levy, that is for the value of both domestic sugar and cost insurance freight, the value of the imported sweetener will actually be channeled to different infrastructure and labor support programs in the sector. Now, the levy plus the hike exercise duty of about 7.5%, which initially stood at 5% and was increased in the Tax Laws Amendment Act, will actually see the prices hike at the retail level, which will undoubtedly affect demand in the longer run. Now, On Board invites the general public, that is to submit comments on the proposed sugar development levy order. That is a 2025 as outlined in the Gazette notice. This according to the Kenya Sugar Board said in the notice, setting Tuesday 21st January as the deadline for the submissions. Now, the levy is said to take effect from 1st February, that is next month. Now, the millers and importers of sugar will actually be required to remit the levy at the KCB at not later than the 10th day of the month. Now, about 15% of the total funds collected, that is from the levy, will actually be allocated towards the factory development and rehabilitation. And also, another 15% will be allocated to producing regions for infrastructure development and maintenance. Now, the allocation will actually be based on production capacity. Now, about 10% of the levy funds will actually be geared towards administration of the KCB and 5% given to sugarcane farmers organizations. Now, the Kenya Sugar Research and Training Institute will actually benefit from 15% of the development levy, while 40% will actually go to the farmers. Now, new taxes. Are they the old problems for Kenya? Now, over the past 1 year, sugar prices in retail stores have actually dipped and stabilized, reducing the costs that is for other producers and consumers. Now, official statistics in December show that the average price of a kilogram was almost 160 Kenyan shillings, down from 214 in December 2023. Now, apart from the financially straining consumers, the looming hike in sugar prices could actually reduce demand, as according to what the experts predict. Now, this will actually be a big blow to the government's intention to revitalize the industry, as the projected collections actually face a shortfall. It could actually also exacerbate smuggling of the product, as the dealers seek to evade the taxes. Now, the Ministry of Agriculture in Kenya estimates that the sugar industry supports the livelihoods of at least 70% of the Kenyan population. Now, at full capacity, the industry can produce over 1.3 million metric tons, which would actually make the domestic demand. Now, the industry, according to what has been observed, only utilizes 70% of the installed processing capacity. So let us see what the looming hike in sugar prices will affect the sugar growers in Kenya and the sugar industry. Though hope it won't actually cause what we call, tension within the country, shortages. But of course, when the shortages happen, then Uganda's sugar could actually be a good substitute for that. Now, as we wind up the Caribbean East Africa report, property dealers exceed a year on average without making single sales. This is according to the Kenya National KNBS. Now, investors enjoyed an average 16 months in 2023 to dispose of residential properties, with 2 and 3 bedroom apartments taking an even longer time, over 18 months to sell. You can imagine. They found it very hard to sell. Now, the Kenya National Bureau of Statistics in 2023-2024, a real estate survey indicates that the 2-bedroom townhouses and 3-bedroom bungalows took at least 6 months and 8 months, respectively. That is to be sold out. Now, on the other hand, 3 and 2-bedroom apartments took the longest time. That is about 19 months to 18 months, respectively, to sell off these houses. Now, a longer off-take time trend tends to reduce the actual sale price of the property, with, for example, properties whose off-take time was a year or more fetching lower sale prices, except for 1 and 2-bedroom apartments. That is so it shows you really how bad the industry was actually performing, 2023-2024. Now, 1 and 2-bedroom apartments account for almost half of the available rental residential properties in the market, followed by 3-bedroom apartments, about 14.3%, studio apartments, and maisonettes with 4 bedrooms or more. Now, the price of a residential property is informed, of course, by location, unique characteristics of properties as number of bedrooms, gross, talking about the gross floor areas, land size of standalone units, floor area, and so many. These are some of the determinants of the price of of a house that is in Kenya. Now, the average sale price of the two-bedroom bungalow was at about 63.3 million in Nairobi. That is upper from 167 million Kenyan shillings in Mombasa, at 12.2 million in Nairobi, middle and lowest in Kajiado at about 2.9 million. Now, similarly, the price of a three-bedroom bungalow was actually highest in Nairobi, upper at 89.8 million, followed by Nairobi middle region at about 34.4 million, and lowest in Machakos at 6 million Kenyan shillings. Now, on the other hand, the price of the four and above bedroom bungalow was actually highest in Nairobi upper region at about 91.4 million, and lowest in Nairobi, that is lower, to about 8.1 million Kenyan shillings. Now, the survey findings indicate that the average prices, that is in flats and apartment units, vary significantly based on their location, talking about the number of bedrooms also. And the number of apartments is relatively lower compared to other types of properties with the same number of the bedrooms and the bathrooms. Now, the price of the four and above bedrooms apartment ranged between 91.9 million in Nairobi upper region to about 7.6 million in Nairobi lower. Now, among the regions, that is in Nairobi, the price that is of the one bedroom apartment ranged between 5.9 million in Nairobi lower to about 60 shillings in Nairobi upper, while the price of the same apartment was about 7.9 million Kenyan shillings, 4.2 million, 5.5 million, and 2.2 million in Mombasa, Machakos, Kiambu, and also Kajiado. That is respectively. Now, as we wind up this report, a three-bedroom apartment fetched about 20.4 million in Mombasa, and 11.4 that is in Kajiado, and about 11.9 in Nairobi middle region. And the average sale price for a studio apartment was about 4.8 million in Nairobi lower region, and 5 million in Chibambu, and 2.2 million in Machakos. Now, the price of the three-bedroom also ranged from 11.2 in Kajiado to about 88 million Kenyan shillings in Nairobi upper region. On average, a four-bedroom and above maisonette was actually priced between 6.5 million Kenyan shillings in Nairobi lower region, and about 121.2 million in Nairobi upper region. So the industry property dealers exited, and actually there is also a similar challenge regarding the property in China. The real estate has actually caused the deflationary side. When we also face back to California, in Los Angeles, the fires that are on, it's actually one of the big trending discussions in the United States with America. And I'm anticipating how Donald Trump is actually going to handle this, whereby the real estate sector found itself, the insurance, because of the distraction of the properties, the insurance sector was actually heavily affected in terms of compensation. There is a lot of people that have to be compensated, but also the real estate sector is also really in havoc, and it might take it a longer time. And actually, some of the people of the experts believe that it might even it might never get back to how it was like. So, property industries haven't showed to be having the best performance, best on a different region. I've mentioned China. Currently, also in Los Angeles, there is that similar crisis, and it's definitely affecting economic activity. Now, that is it from the Caribbean, East Africa. Of course, in case you just joined us, treasury bills in Kenya undersubscribed as the rate fall, and a looming hike in the sugar levy. Looming hike in sugar prices as millers face a 4% levy come February this very year. And of course, the property dealers exceed a year on average without making a single sale. This is according to the Kenya National Bureau of Statistics. And now, Finally, let's switch and take a look at what's making headlines onto the international scene.